Ladies and gentlemen, a very good morning, or should I say good afternoon. A colossus, as I call him, a very tall personality, literally as well, a most distinguished teacher, author, leader, mentor. I can call him with several other superlative names. I think everybody here knows him very well. Most of you have been his students as well. Recently, I also had the opportunity, or should I say good fortune, of listening to him speak at Mysore on audit quality maturity model, and I'm sure you're all going to enjoy this session today. I'm honored to be reading a profile of CA MP Vijay Kumar sir. I'm sure it's only a formality because all of you know him very, very well. CA MP Vijay Kumar sir is a fellow member of the ICAI. He's also a company secretary and also a cost accountant. He was a Central Council member of ICAI for the terms 2016 to 2022 and has held chairmanship of Accounting Standards Board, Valuation Standards Board, and Digital Accounting and Assurance Board. He is presently the Executive Director of Group CFO of CFI Group. He is an Independent Director and Chairman of Audit Committee of LIC of India. He is also a Non-Executive Independent Director at Heritage Foods Limited and Geojit Financial Services Limited. He is a Non-Executive Chairman at Sella India Software Services Private Limited. He has taught accounting, financial reporting, and corporate laws for CA students for more than 20 years, and he has authored 10 popular titles with extensive readership, and his books have been in print for over 15 years. With this brief introduction, I present before you CA MP Vijay Kumar sir. Thank you very much.
Can you switch off this light? This light, can you switch off? This yeah, perfect. So very good afternoon, and extremely happy to be here at another event of the Bangalore chapter, hosted along with other branches. Sincere thanks to Divya and her team at the Bangalore branch. Sincere thanks to the chairman and members of the other host branches as well. Senior members of the profession, past chairman of Bangalore and all other branches who are here today, and fellow professional colleagues. By the way, half an hour, 45, what is the time? How much time? 1 hour, 1.5 hours, eh? Break is at 1:30. Okay, fine. So best wishes to all of you. So thanks to Raghunandan for that kind words of introduction. In fact, I failed to recognize that this was a jointly hosted event. I just spoke on the same topic a month or two ago at Mysore branch. I would have otherwise chosen a different topic to share with you. But nevertheless, considering the importance of this particular topic and the fact that it has become mandatory from 1st April 2023. It is mandatory from 1st April 2023 for all accounting firms who are doing audit of listed companies, audit of banks, and audit of insurance companies. So the only exclusions are, those are auditors of branches of banks are excluded for now, but given the public interest, maybe a year or two from now, the institute will make it mandatory for them as well. So as far as this particular audit quality maturity model is concerned, while it is mandatory for audit firms who are auditing the three categories of companies which I mentioned to you, it is a very important tool even for audit firms who are not auditing those segment of companies, because it does help you to improve the overall audit quality and reduce the risk of the profession. And we just saw Guru walking us through all the risks and the way the regulators are now closely following the acts of the profession. Before I come to the tool specific, I'll spend about 15-20 minutes to set the context of why this tool has been developed by ICAI and why it has been made mandatory. I'm not sure how many of you are aware, 3 years back, I think 2019, 2020, the institute set up an independent directorate called the Center of Audit Quality. The equivalent of this in the rest of the world is there only in US, where AICPA has an equivalent organization called Foundation for Audit Quality, FAQ. Our institute is the only other body who has set up a Center of Excellence for promoting audit quality, which is called CAQ in short. This particular infrastructure which you see here on the slide is the Center of Excellence of our institute at Jaipur. And the entire audit quality related initiatives, the literature and research, all of it is happening out of this particular facility at Jaipur. The Center of Excellence is similar for those who have visited in Hyderabad. It's something similar, but this is a much larger campus. It's a residential campus as well. And the idea of this Center of Audit Quality is once in 3-5 years, given the developments happening around the audit profession, and Guru did draw reference to Ind AS, the disclosure requirements, how can somebody miss out one particular note? So in order to ensure that capacity building, this particular center has been dedicated for conducting specific campus-based training programs for improving audit quality. And more importantly, in this particular Center of Audit Quality, I would encourage all of you, whenever you get the opportunity to visit the northern part of India, more particularly Jaipur, this is our infrastructure, no permissions required. You can walk in anytime you want, and you can always even plan a vacation around one of the programs which is going there and equip yourself. But one of the main reasons why this center was set up is there are many members in practice. Don't get me wrong, allow me the freedom to express what I believe is correct. There are many members who have been in employment for 5 years, 10 years, 15 years, 20 years, quit their employment, mid-career decisions, age 35, age 40, quit their employment, take a certificate of practice, and within months, start signing some audited financial statements. The employer with whom they worked, 1 or 2 group companies, they get some audit, few friend circle, they get some audits, and start signing the financial statements. Within 2-3 months of quitting being in employment for 15-20 years. They are also chartered accountants, but my own reading and my own assessment, and I can speak for myself, I have been in practice for about 8-9 years, and I've signed audited financial statements. But since 2007, I have been in employment, And today, if I were to quit my employment, and if I have to do the audit now, even for a 50 crore company, I would consider myself as not having capacity to sign that particular audit, despite having been in practice for good 8 years in between, despite being in touch with the Audit and Accounting Standards, Schedule 3, Companies Act. I'm fairly on top of it, but applying them as a preparer is different from applying them as a auditor. It's completely different. And we have this very unfortunate scenario, my own personal view. Please disregard it if you don't subscribe to it. That if you have been in employment for 10, 15, 20 years, before you can come back and sign an audited financial statement, it is important to develop that capability, that competency of how to look at it from an auditor's perspective. So 2 initiatives have been taken by the Institute, like it, hate it. One, for all these members who are coming back into practice, an orientation program, and in fact there was a serious debate on should we make a certification mandatory, a 1-month program and a certification mandatory, so that people have been put through the grind of refreshing completely on code of ethics, audit standards, company law, FEMA, other legislations applicable for audit, including PMLA. And this particular infrastructure and Center of Audit Quality has been set up for that purpose. Second, as all of you must be aware, in the new course structure, you are allowed to do 2 years articleship, write your final, get a CA. But whenever you come back to practice, go to employment wherever, whenever you come back to practice, work for 1 year in an audit firm, gain that necessary experience, only then you will be given the certificate of practice. Lot of debate, many people were not so comfortable as to whether it was the right thing to do, but globally it's well established, and the council rightly took the decision of let's go ahead and implement this for the newly qualified chartered accountants. Existing chartered accountants, obviously, they passed under an earlier regime, so not applicable. But for those who will be now pursuing under the new regime, it is mandatory to do 1 year of work in an accounting firm before they can get a COP. So you will not have situations where people take voluntary retirement age of 45, 50, come back and sign balance sheets and give audit certificates next day. That will enhance the overall quality of the profession. So this particular Center of Audit Quality has been set up, keeping all of these things in mind, and this is the infrastructure we have there. Now, as I share my thoughts with you over the next 70, 80 minutes, whatever I share, all of it are my own personal views. None of them should be seen as views of any of the committees of the institute of which I am part of. Many of you would have heard me on this, and these are 3 principles I have very strongly believed in and practiced all along. Interest of time, I'll spend time on the third one, what you see at the bottom, third one. All of us here are involved either in issuance of an audit report or involved in preparation of financial statements, balance sheet, income statement, cash flow and all. And as Guru mentioned, when it comes to probably smaller clientele, we are also involved in preparation as well as expression of an audit opinion. What is important for all of us to subscribe, and I have believed this and I practice this, the balance sheet is a communication. It tells, it speaks. Income statement is a communication. Audit opinion is also a communication. Just like each of us in our personal life, whether it's from family members, children, spouse, brothers, sisters, or at office, from our colleagues, bosses, or reportees, everyone here has an expectation that any communication we receive, each one of us want that communication to be truthful. When somebody tells us something, our expectation is that the communication should be truthful to us. We all have the expectation that the communication we receive should be complete and not incomplete, and it should be clear. So when that is true for the communication we receive, it is equally true for the communication which we make through the financial statements and through the audit opinion. So the work which each of us do is a communication. The output is a communication, and it should be clear, candid, complete. Clear, candid, truthful, and complete. I am sharing some of these as the founding thoughts for this tool which has been developed. Now, I would again draw reference to the founder president of the institute. Some of you have heard me on this, but important to reiterate. I'll just focus on the first paragraph, the line which is there in red. The founder president of the institute, way back in 1949, to quote him, he says, "Every profession has a sense of social obligation, and it is more so for the accounting profession. And when it comes to social obligation, he does not talk about planting trees, giving water, clean water, no. He says the work which we do, the output which we generate, has an impact on the society. The financial statement which we give, bank uses as the basis for giving credit. Guru showed one slide on what is the stock as per the financial statements, what is the actual stock. There's a bank who is relying on that, bank who is lending that, and whose money is the bank lending? It is the public money, society's money. And when there's a bad debt, who bears the bad debt? Not the bank shareholders, not the bank management, but it is the depositors, public, who bear that loss in the form of lower rate of interest. If I would be eligible for a 7% interest, bank would, as part of the net income, reduce that 7 to 6.5 or 6, and that shortfall of interest which a depositor gets and on whose money the banking system operates is actually bearing the whole loss. So it's important for all of us to recognize that the work which we do has a direct bearing on society, and instead of beating our chests on the drinking water I do and this I do and that I do, my own personal view, quality professional work is by itself a huge contribution to the society, because the society depends on the work which has been done by all of us. Now, I'll spend 2 minutes on SA 700, which has again reference to this AQMM, which is the topic of the discussion. What you see here, interest of time, I've clicked all of them at one go. As far as the work of audit is concerned, you have the standard series 200, which is essentially about planning the audit work. 300 series is more about execution of the audit work. 500 series of standards is regarding the evidence, communication, and all of that stuff. And SA 700 is the output. SA 700 is the audit report. 701 key audit matters, 705 modified report, 706 emphasis of matters, other matters, etc. Now, all of us here who are signing partners, our entire focus is on the output which we sign, which is SA 700. From 200 series, 300 series, 500 series, there's a set of staff who have worked on it and have given this particular output. And when this particular output comes, every audit report you sign, it is very important that you just don't focus on the format of audit report. If you only spend time on this contents, and these contents are not my discovery, they are a Control C, Control V from SA 700. Copy paste from SA 700. There is no value addition from my side. All that we need to do, and my own view, before you sign any audit report, if you just have this chart in your shelf there or wherever is the board which you have, and just go through it. All that it says is very, very simple requirements. And if you have taken care of these simple requirements, there's no way an audit can be less effective, less qualitative. What SA 700 requires you to do when you sign off is, one, are you making a disclosure of the significant accounting policies? Are you making a disclosure? And my own experience of having been in FRRB, QRB, and NFRA, there are several annual reports where you don't have the accounting policies adequately disclosed. I'll give a very simple example. Most cases, accounting policies is again a Control C, Control V of the last year. Till last year, there were no hire purchase or lease transactions. This year, company took some asset on lease. This year, company took some asset on hire purchase. When you do a Control C, Control V, last year you did not have an accounting policy on leases, but this year you require an accounting policy on leases. So that verification, the signing partner needs to ensure. He needs to ensure that for every item in the balance sheet, every item in income statement, is there a supporting accounting policy available in the financial statements? That's requirement number one, SA 700, not my requirement. The second is consistency and appropriateness of accounting policies with the financial reporting framework. We have 3 financial reporting frameworks. 3 frameworks are there. 2 of them are for joint stock companies. 1 for the non-company entities, partnership, LLP, society, cooperative society, etc. For joint stock companies, 1 framework is the Ind AS framework. Second framework is the AS framework. And for non-company entities, it is the framework which is issued, the standards issued by the institute. Now, what we need to ensure is whether the accounting policies are in sync with whatever is there in the concerned accounting framework. That is the second requirement which an auditor has to do before you sign off your financial statements. The third is reasonableness of accounting estimates. So when you finally sign off, the article student paid assistant has kept before you the financial statements. All that you need to do and recognize is the financial statements are full of estimates and there are hardly any items. Please mark my words carefully. There are hardly any items which are actuals. Financial statements are full of estimates. So you are required to come to a judgment on whether those estimates are reasonable. For example, on property, plant, equipment, WDV is an estimate. Life of the asset, residual value, etc. is an estimate. Investments, lower of cost, fair value is an estimate. Inventory, NRV is an estimate. Receivables, provision for bad debts, net of provision is an estimate. Liabilities, whether it is your retirement liabilities, taxation, all of those are estimates. So as an auditor, you are required to satisfy yourself whether those estimates have been done reasonably. That's the third requirement which SA 700 requires you to do. The fourth is the reliability and comparability with the previous year. So any statement is meaningful only if it has comparability. So you should see whether the policies, the way they have been applied now, the presentation which is applied now is comparable with that of the previous year. Then the requirement of whether the disclosures are adequate enough for users of financial statements to understand. Please recognize that for a preparer, all the 365 days they are involved with the business. For an auditor, at least 30, 40, 50 days you are involved with the business. So you have an understanding of that particular entity financial statement. But for a user who could be a lender, an investor, whoever, he is not involved with your business for 60 days or 365 days, and hence the level of disclosures are required. For example, Guru did mention about in Ind AS you have lots of disclosures. Look at it from the following perspective. Ind AS is applicable for large public interest entities. And in the large public interest entities, where the sums involved are thousands of crores and public money, and you have institutional shareholders like mutual funds and other affairs involved, where they have research capability to understand the business, unless the information is made available, they cannot take decisions like a common man who looks at the price movement or some friend has told, they can't buy and sell based on that. They do require enough information which will help them to take a decision. It is from that perspective. Otherwise, what will happen is, you will have an arbitrage of information. There will be some internal stakeholders who will have more information, and there are external investors who will have less information, and that arbitrage of information, one will gain at the expense of other. It is important that the investors who actually give you the money have access to everything about the company, and that information should be made available. And we should realize that as a business, I am in existence because investor has given money. So you should never think it burdensome to give information to the investor. You are in business, you have a 3,000 crore business, your 10,000 crore business, 30,000 crore business, because a public have invested in you. And I am obligated to give information to him. And there is no reason for you to say that I will hold back that particular information. And it's in that context that disclosures are important. And when you sign your financial statements as an auditor, you should spend that little time and see, this company had these transactions during the year, some merger, some demerger, sale of business, some unique transactions. Have we disclosed enough for a user to understand? That's the next responsibility you should satisfy yourself. Thereafter, whether the terminologies used are appropriate, you should not use inappropriate terminologies. The terminology should be pretty consistent. And they should give reference to which financial reporting framework. I told you there are 3 frameworks. You should tell which framework. And I want to caution you one thing. I've seen it last year. There are many unlisted companies who prepare financial statements as per AS, not Ind AS. And these companies still say that the financial statements are prepared as per Companies Accounting Standard Rule 2006. I have seen audited financial statements of March 23, March 22, where people give reference to 2006. Please note, the 2006 rules have been withdrawn, they have been repealed, and fresh set of rules have come in 2021. So in your notes to accounts, first paragraph, when you say, you can't have the copy paste of earlier years, it should refer to 2021. And I still know there are many companies, many means many, who who still say they are prepared as per accounting standards issued by the Institute of Chartered Accountants of India, which is irrelevant as far as the joint stock companies are concerned. So you cannot give a reference to a wrong framework. You should give reference to the right framework when you do it. So that's the next requirement. And whether it is materially in right with all of the requirements of the framework, all the accounting practices and possible bias in management judgment, like for example, estimates on sales returns, provisions made, you should have exercised your judgment. The materiality of all corrected and uncorrected mistakes. This part, I'll spend 30 seconds. If you notice, all of us, when we do our bank branch audits, we give a memo of adjustments which have been done. Memo of adjustments which have been done. Whatever branch has prepared, what are the memo we give. Now, there is a directional thought in MCA and in NFRA. In MCA and in NFRA that when you do audit of companies also, preparer has prepared financial statements. I went to do the audit. I identified 15 adjustments to be done. 12 have been corrected, 3 uncorrected. That list of 15 items, you are required to publish it. You are required to publish it. So that's a requirement which is being debated, In many jurisdictions, it is a mandatory audit working paper. Here we don't have that as yet, but please don't be surprised if it soon becomes a mandatory requirement, wherein the preparer is prepared, you did the work, identified 15 adjustments, 12 have been corrected, 3 uncorrected. This 12 corrected reflects on the quality of preparation of the preparer. So all that memorandum is required. So you are required to consider that. Then see whether you have sufficient and appropriate audit evidence before you arrive at a conclusion on reasonable assurance and issue the audit opinion. Now, 3 slides. All of these are relating to the work done by FRRB and QRB. Just to give you a sense of the quality of work on the ground. And please note, this particular slide and the next 2 slides are for about 80 companies a year, 80 companies a year who are either listed companies or large unlisted companies. If this is so for the large companies, then what is it you can extrapolate for the entire population as a whole. So in that context, if you notice that green pie chart, what it says is, for this period of 2012 to 2020, 66% of the audits, there is a scope for improvement. There is 34% of audits where are reasonably acceptable, generally acceptable. 66% of them have scope for improvement, either marginal or substantial improvement. That's the position which we have. And for the subsequent period which is there, similar statistics are there. So I'll skip this slide in the interest of time. I'll just spend a minute on this. As far as the FRRB is concerned, until 2 years back, FRRB had a mandate for reviewing listed companies, but ever since NFRA was formed, FRRB now does review of unlisted companies, length and breadth of the country, no differentiation between Tier 1 city, Tier 2 city, Tier 3 city. And we all know in Tier 2 and Tier 3 cities, there are many companies who have turnovers of 300 crores, 500 crores, 1,000 crores. There are several companies of that particular size. All of them come under the mandate of FRRB. At present, FRRB does a review of about 80 to 90 companies a year, and there is focus to increase the scale of such reviews. And in an FRB review, if there is no impact on true and fair view of the profit, they just give a advisory for improvement. But if it has an impact on true and fair view, it is referred for disciplinary action directly, and for action on the company, it is referred to SEBI or MCA. Now, before I get to this, I just want to highlight one more important aspect before I get to this AQMM. I'm not sure how many of you are aware. You're all aware that we currently have SQC1, Standard on Quality Control 1, which is mandatory for every practicing unit, whether you do listed, unlisted, doesn't matter. For all of us, SQC1 is mandatory, and SQC1 requires each of us to have a quality control manual in the firm, and the work should be done as per the quality control manual of the firm. This SQC1 is now getting withdrawn and will be replaced by two standards. The exposure draft of which has been issued about 3 weeks back or 4 weeks back. I would encourage all the branch leadership who is here across the state in the respective cities, and I would have actually, but for the fact that this topic was finalized earlier, I would have loved to talk on that exposure drafts today. This SQC1 is getting replaced by two standards called Standard on Quality Management. Earlier it was Standard on Quality Control, now it is Standard on Quality Management. Globally, these two standards have been finalized. Institute has now issued the exposure draft, making minor edits. And from 1st April 2024, it will be applicable for all audits for financial periods beginning from that particular date. So this particular quality management standard requires each of us, whether we are a small practice unit or large practice unit, to implement that standard on quality management. So the exposure draft is on the website. I would encourage each of you to look at it in the context of your firm and take needful steps for implementation of the same. Now, coming to the core of the topic on audit quality maturity model, all of us understand the importance of quality. Everybody understands the importance of quality. But when it comes to audit quality, it is not easy to measure audit quality. It's not easy to measure audit quality. And it is well acknowledged globally. It's very well acknowledged globally that audit quality cannot be measured. You cannot objectively or quantify an audit quality. So two things are happening. One is what we call audit quality indicators. This has evolved across the world. And then there is what is called audit quality maturity of the firm, which is a unique initiative of the Institute of Chartered Accountants of India. What you see as AQMM is not there anywhere else in the world. It is a unique initiative of the Institute. It was recommendatory for last 2 years, mandatory from 1st April 2023. What you have for audit quality across the world is what we call as audit quality indicators. I'll give an example of what it is. For example, I have an audit firm doing audit work for my company. Just like an employee, we have key result areas and key performance indicators. So for an employee, every organization has what are the KRAs for the year, what are the KPIs, and you measure the employee's work with reference to that KRA and KPI. On exactly similar lines, across the world, what is developed and it's reasonably matured is audit quality indicators. at the beginning of the year, between auditee and auditor, we agree that for this particular year, these are the set of KRS and KPIs. For example, you should dedicate a team of so many people with so-and-so competencies. That's one indicator. Second indicator, your team should have done so much of physical inspection and interaction. That is another indicator. Similarly, you have another indicator like during the period, so much of time has been spent on audit of the information technology systems. So you define a set of indicators at beginning of the year, and end of the year you sit with the auditor and tell, look, this is what we agreed as the scope to be done. Forget signing the balance sheet. Beyond that, for me to get a comfort that you signed properly, I wanted you to do these 7, 8, 9 things. Where are you on those 7 or 8, 9 things is an audit quality indicator. There are some companies globally who publish that also as part of their annual report. This is a global practice. What we have developed now in India, and it's unique to India and rest of the world is closely following this, is how do we define the maturity of an accounting firm in the practice of audit. It is in that context that this particular tool has been developed. The objective of audit quality, when it comes to audit quality, the objective of audit quality is, one, to increase the awareness of people about the importance of audit quality. Second is to provide a conversation between the auditor and auditee on the audit quality. And third, to engage all the stakeholders on the importance of audit quality. Keeping these three objectives in mind, this entire model has been developed. Now, how does somebody ascertain compliance with an audit quality? While I get to this slide, I'll just draw reference to a public statement made by the NFRA chairman as recent as 3 weeks back. In fact, the past president, Mr. BP Rao, was here. He asked me to spend substantial time on NFRA with you, but maybe another occasion I'll come. All the NFRA decisions so far, I'll present a case study on each of those as to where they have gone wrong and what precautions we need to take some other occasion. But I want to convey this message of the NFRA chairman. And he has told this in a public forum, and in one of the other private meetings which I had, he had reiterated the same. And what he says is, I am not here on a fault-finding exercise. I don't have that intent at all. All that is expected is, there are a set of standards. Have you done work as per that standard? Demonstrate it. You just demonstrate that you have done work as per standard. If the standard is weak and is not enabling quality, that's a different issue. But there is a standard. Have you done work as per the standard? Recall Guru's closing comments, the last set of comments when he came to the thank you slide. He talked about it's not just saying that I have done quality audit. It is about showing evidence that you have done quality audit. How do I trust that you did a quality audit? Is it by accident or is it by design that you have done it? So all that he says is what is reflected in this slide, and this is from the AQMM forward. In the forward to that particular document, you have this. What it says is only 4 things. It says only 4 things. First, perform work as per the requirements of the standards, whether it is audit, accounting, company law, whatever requirements, perform work as per that. Are you doing the necessary work as per those standards? Heart on hand, you can ask for yourself, collectively as a profession, how much more distance we need to travel for that. How much more distance we need to travel for that. So that's the first requirement. The second requirement is, as I mentioned to you, SQC1 is applicable for all of us, every practicing unit, irrespective of whether you're auditing a listed or unlisted, irrespective of it is. So each one of us are required to have a quality control document in the firm. Hand on heart, how many of us have it? The second requirement, what it says, the right side, what it says is, have you done work as per your own firm's quality control procedure? It doesn't say, it doesn't ask you whether it is the best quality control procedure. It only says, your firm has a quality control procedure. Have you followed what is there in your firm's quality control procedure? That is the second requirement. But to demonstrate that, I should first have a quality control procedure. That is the second requirement. The third one, come to the left-hand side. Third left-hand side is there an ethical behavior of the audit engagement team? Ethical behavior of the audit engagement team. I'll give a very simple example. Maybe I used this example in Mysore as well. I don't recall. Very simple example. And I recall this from my articleship days, the firm where I was involved. In fact, many of the senior members would have gone through similar experience. At least this period, I don't find it too much, but at least the period when I did articles, I think it was more or less the norm. We were all prohibited from taking stationery from the auditee. During articleship, we were required to carry our own stationery. We are not even allowed to take stationery from the audit firm. Now, the example I'd like to highlight here is, imagine there's an audit partner and a team of 5 people. The young team of 5 people, age 22, 27, 30, young team. That team is doing the work and they've hit upon some non-compliances or some issues relating to the accounting. Now, imagine 2 scenarios. Scenario 1, the audit partner visits the office, goes directly and sits with the entrepreneur or CFO every time, chats with him, hand on him, walks in the corridor and goes back. The audit team of 5 people are observing it. Second scenario, the audit partner comes, spends time with the team, interacts with the management with little bit of distance when the staff are there, and does not socialize, particularly during the audit period. In these two scenarios, the audit team, those 5-6 people, age 22, 24, 27, their ability to tell their boss fearlessly that I suspect something, please guide me if I should do more. Please guide me if I should do more work, will be there only in the second scenario. It will not happen in the first scenario. You can shout at the pitch of your voice on independence, but what is important is walk the talk. And please note, at this age, let me tell you why for everyone. I'll speak of myself. At this age, despite wherever we are, if there are some policies of the government or actions of government we are uncomfortable, I'll be very candid. I would be little afraid to speak openly about it, criticize about it. I still have that fear. At this age, I have that fear to openly criticize some of the actions. I still have that fear. Just imagine a 22-year-old called 23, 25-year-old kid. How will he or she share it to a person where that person is not giving the impression of independence? And that's where audits fail. So in this particular context, what it says, very important for audit quality, is the engagement teams, how you are able to drive ethical behavior. They are ethical people, but have I enabled it? I should enable ethical behavior, help them to be ethical and speak out. I should give them that freedom. That's important. That's the third requirement of an audit quality. The last one is issuing audit reports that are appropriate in the circumstances. In fact, there are many instances where audit reports which are issued are not appropriate. I'll give you examples, and in fact, I added those slides because Mr. BP Rao wanted it, but maybe some other time, but I'll still tell the content. In two of the NFRA decision cases, one case, there was a loss of 3 crores, and after adjustments which were to be done, the loss is 35 crores. So, loss 3 crores, single item, modified report, qualified. But the moment it is material and pervasive, you are required to give an adverse report. So that gentleman gave a qualified report instead of an audit report. That's one example. The second example is the opposite. Same NFRA. One of the auditors gave an audit opinion with 8 emphasis of matters. 8 emphasis of matters. Emphasis of matter is supposed to be used very selectively. You can't add it like a laundry list. So in that particular case, again NFRA hauled the auditor and said, look, you gave that emphasis of matters without even understanding what that standard is, and here is a penalty of 5 lakhs and 1 lakh, 1 year of debarment, take it. And that's how it has happened, and rightly so, because I have come across more so in public sector audits, where the auditors, because of the fear scenario, whatever scenario, they have a tendency of saying that, let's qualify, let's give a UM, let's give a OM. But those things are required to be very selectively used. So the fourth pillar of a quality audit report is the audit report given appropriate, unmodified, modified, qualified, adverse, disclaimer, whatever it is. Is it an appropriate report which you are giving? That's the fourth pillar. So if you are able to ensure all of this, you can tell I am in the zone of quality audit work. That's all you can say if you have been able to achieve these 4 elements. Now, over time during peer review, these are things which have been identified. All of us know this. Inadequate audit documentation, no quality review manual, management representation letters not taken, and I'll spend a minute on this. Management representation letter, I come across many cases where people actually collect. The people don't collect, but the people who collect. But please note, collecting a management representation letter and putting in the file is as good as a tissue paper. It's as good as a toilet paper. It has no value at all. The MRL has value only if 2 things are done. The management representation is considered as appropriate work only if 2 things are done. One, that MRL has 20 paragraphs, 20 representation, whatever. You should have evidence in your audit working paper that I have verified those 20 things. They have said 20 things. Did I verify those 20 things? I should have evidence of the same. If you don't have evidence of verifying those 20 things, that MRL is a waste paper. Second requirement, there should be evidence that SA 700, recall that last line, sufficient and appropriate evidence. There should be evidence that you have considered the contents of MRL in forming your audit opinion. That document should also be there. Only if these 2 documents are there, these 2 activities evidence is there, MRL is valid. Otherwise, it's as good as no MRL. So that's the other finding in the peer reviews. Written communication to those charged with governance, many don't do that. and compliance with the technical standards. Now, as far as the audit quality maturity model is concerned, the CAQ took upon itself 3 tasks. Task number 1, identifying which entities we need to apply this. Task number 2, what are those section headers and what should be the list of points based on which you should arrive at an opinion on what is audit quality. And third is how people can focus on improving their audit maturity. As I told you at the start, mandatory from 1/4/23 for every firm who is doing an audit of a listed company or a bank or a insurance company. Exclusions are those doing branch audits. But my view, and I strongly encourage, even if you are not doing an audit of those 3, you should still follow this AQMM. It will help you get an audit of listed company later. It will help reduce the risk of doing audit and improve the audit quality in general as well. This is important. As far as the audit quality maturity model is concerned, the scoring pattern is defined in such a way that you fall into level 1, level 2, level 3, level 4. This is the city of information technology. All of you would have heard about CMMI, Software Development Maturity Capability, CMMI, level 1, 2, 3, 4, 5. Level 5 is considered to be the most mature. Similarly, here there are 4 levels. So the scoring is such that you will fit into one of those 4 levels. And please note, when you do your assessment and say you are level 2, you are not supposed to, you are prohibited from communicating it either through your website or any communication to your clientele or through your visiting cards as well. You are not allowed to do it. So all of this, whatever maturity level you are in, there's a peer review process. So every time a peer reviewer comes, he will also do the review of your AQMM score, and he or she will confirm you are in level 1, 2, 3, 4. And that particular level which you are, the peer reviewer will submit it to institute. After the peer review board approves it, it will be hosted in the institute site along with your peer review certificate, and you are individually, even if it is hosted, you are individually prohibited from telling in your letterhead at the top, we are a level 1 firm, or in your mail, bottom to tell that we are a level 1 AQMM firm. You are prohibited from doing any of this. So it just gets hosted there as a peer reviewed firm, and a particular level of maturity, it just remains at the institute website. That's a very important caution. And for some of us, we had our peer review 6 months back, 18 months back. Next peer review will come 3 years hence. But I want to get my AQMM status reviewed, so you can still ask the institute to send a peer reviewer specifically for the purpose of AQMM review and get that AQMM review done. And next time onwards, it will be synchronized with the peer review cycle. So first time alone, if your peer review is already done, you could ask them to come clear that. But later onwards, it will be synchronized with the peer review cycle which is concerned. Now, so as far as the audit quality maturity model is concerned, there are 3 section headers. And these 3 section headers, there are questions under different elements and scores which are attached. And based on the final scoring, you get classified as level 1, 2, 3, 4. I'll just walk you through that scoring, how it is evaluated before I come back. I'll come back to the slide. So you have total of 600 marks, out of which 280 marks are for your practice management, how your operations are there. 240 marks for the human resources. Audit is ultimately about quality of human resources. While there will be lot of automation, digitization, etc., 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 etc. Audit finally is the judgment of the auditor. Judgment of auditor. Tools will help you. Tools will help you get more objective data, more objective information, but the final judgment is that of the auditor, of the individual, that competency. So the HR aspects, the quality of human resources, you have a good score of 240. The third category is on the strategic aspects of the firm, what is the direction of the firm, and the how the firm is functioning in terms of infrastructure, scale of operations. You have about 80 marks. The idea is to encourage firms to scale. So totally 600 marks are there. If you score a minimum of 25% in each of them, in each section, if you cross 25%, then you are a level 1 firm. 25 to 50, you are level 2. 50 to 75, level 3. Above 75, you are level 4. Please note, if second and third section, I am above 75%, but in the first section, practice management, I am having a score of below 50%, I will be called a level 2 firm. So it's important that you should cross all the 3 gates. All the 3 gates you have to cross. You cannot say I crossed 2 gates and third gate I am lower, you'll still get a benefit. No. Each of the 3 gates you should have crossed up to 25, 25 to 50, 50 to 75, above 75. My own expectation, many of us will be level 3. Many of us will be level 3. Maybe some of us will be level 2, but with the ability to move to level 3 quickly. Very few will be level 4, which is more aspirational. I don't think we should race towards that. As long as we are conscious about areas for improvement, it is good. Areas for improvement, it is good. And my view, as I said, most of us will be level 3 or could be in level 2. Level 1 is a red flag and it's an area for improvement for us, particularly if you are taking up audit. Now, how does these 3 categories of scores work? The first one is on practice management. You have about 9 categories of areas in which assessment is done. 9 areas in which assessment is done. Interest of time, I'll focus on some of the key ones. For example, the first one, which has 12 marks. 12 marks. This is for audit quality maturity model. Audit practice. Now imagine there is an accounting firm which is largely into tax consulting, tax litigation, tax practice. They also do some audit. So the firm has a revenue of, let's say, 10 crores. Audit revenue is 2 crores. Rest of it is, let us say, taxation, consulting, etc., etc. So which means that firm's DNA and focus is largely in the area of non-audit. So what the first question says is, if you want the 12 marks fully, if you want the 12 marks, more than half your revenue, more than 50% of revenue should come from audit practice, which means you are a firm focused on audit. And rest can come from other services. And with MDP coming, multidisciplinary practice, corporate form of practice, many of us, my own view, particularly after you get a size, after size, the non-attest function, best to do it in a corporate firm, do it separately, because the legal risk of audit is substantial. For example, the firm can be banned for 5 years. So if you do everything in that name, and you're banned for 5 years, the entire firm collapses, whereas you can insulate yourself by taking non-audit practice in a corporate form, keep it separately. You can at least divide a China wall and manage it separately. Any case, the partners handling each of them is quite different. So those are things you have to take a decision depending on the size of the firm and the size of audits which you are doing. So for example, that's one question. The second and third questions are around what is the kind of documentation you have, workflow of how the audits are managed, monitored and all, quality control procedures, etc. Then technology adoption, and no better place than Bangalore, no better than situation than having Guru himself speak before this session, where you have how much of technology adoption the firm is doing in terms of performing its work. He gave us examples enough, and all of us are aware the scale of organizations and complexity has become so much, it's impossible to do anything manually. So how much of digital practice are being adopted? So you have a score, and if you look at it, the maximum score comes for quality control procedures out of 280. 80 marks is for quality control procedures, SQC1, which will be replaced by SQM1 and 2. And second is on technology adoption, 64 marks. 144 out of 280 marks is essentially for that. So how you are scoring on that, the individual questions are there, time permitting. Technology audit, I would be skeptical about the quality of work which has been done. So right from the partner level to the team level, how much of competencies, both certifications and hands-on work experience. Certifications and hands-on work experience is there in that area. I'll give you a second example, and this is a very, very common mistake which people do. Audit of NBFCs. There are thousands of NBFCs which are there, and I've come across many people accept an NBFC statutory audit. If I were to get that audit engagement today, if I were to quit my job and start practice, somebody tells here is an NBFC of even 10 crore income, asset base of 100 crores, I will not touch it, because to do an audit of an NBFC, you should have complete insights on all the RBI circulars historically and the way those circulars are applied. Unless you have an understanding of how those RBI circulars are applied, you should not even touch that audit. So if I am a firm getting an opportunity of an NBFC audit, it is important that I should hire somebody who has that experience, make that person part of the engagement team, only then do that particular audit. Same thing applies for many of the industries, because these audits, financial statement, it is the same debit, credit, income, expense, asset, liability. But how these transactions culminate into income, expense, asset, liability depends on the understanding of that particular business. And for that, the subject matter expertise is extremely important, extremely important. So in that context, any audit you do, so it talks about all of these parameters with reference to the audit work done by the firm, what is the training process which they have, how they are assessed and things like that, resource turnover, attrition and compensation management. And out of 240 marks, 104 marks are relating to how you are managing attrition in the firm and what is the kind of compensation which you are giving. So there's adequate scoring towards that. And then the last section is on practice management. So the vision of the firm, mission of the firm, and infrastructure. For example, it gives weightage to firms who are having multiple offices, how much of IT adoption, licenses which they have, all of those have some scores. 48 marks are for infrastructure, both technology and non-IT infrastructure together. How much is there? All of that together constitute a total of 80 marks. So after getting this scoring, if you score less than 25 in any of the sections, you are level 1. If you cross 75% in each of the 3 sections, then you are considered a level 4 firm. I'll just walk you through a couple of questions. It's a very exhaustive questionnaire, but self-explanatory. I'll leave this deck behind. but I'll just walk you through a couple of questions so that you get a sense of how these questions are to be read and applied. For example, I have told you earlier, firm which has more than half the revenue from audit practice gets 4 points. Less than half, it is 0 points. Similarly, does the firm have a vision and a mission statement which guides the functioning of all the staff in that particular firm? Then you have a score of 4, else it is 0. Does the firm have audit manuals in place? If it is there, you get about 8 points, else 0. And please note, when a peer reviewer comes, you can't give him an audit manual which is 3 years old, 5 years old. These are all supposed to be reviewed every year. And I'll give you one example of an NFRA case. NFRA case, one of the firms, you know, in India, they sign in the name of the Indian legal entity. They had a situation where the audit manual globally, whatever is there, that global manual was followed here, and that was the manual which was used. The audit firm was signing in the name of the Indian firm, XYZ and whatever, but the manual was of that particular global firm which was there. NFRA said enough, not applicable, penalty, pay that penalty now, pay the penalty. So this is one of those cases. So when you have these firms, this kind of audit manuals, friends firm, copy, paste, all that, do it, but put some time and effort in completing the process. Copy, paste, do it, but put some time and effort to at least remove the other firm's name, put your firm name, do some language edits up and down to whatever extent possible, do it. At the minimum, that needs to be done. So in that process, at least you understand the document much better. And I've given you an NFRA proven disciplinary case. It's available on the Institute website. I am not naming the name, but the name is available in the NFRA website, not Institute website, NFRA website. The firm name is available. Firm name is available now. So that is there. And availability of standard templates for letter of engagement, representation letter, etc. But on this standard templates, Guru's example again, he gave that example of to whomsoever it may concern. And I have been in practice, and maybe I might have also done, I don't know. So typically you tell, this client is asking, we gave a similar certificate to that client, just take that file, there'll be a similar certificate, prepare and give. He wants it in 5 minutes, so that guy prepares and gives. And as he said, I'm filing something else parallelly, I sign it off and goes off. Now, for that certificate, I will charge 10,000 rupees, but I will not spend the time. I'll not spend the time. So that's the kind of mistakes which happen. So while templates are good, the templates, whether they're being applied properly, is also an important part. So if you have those templates in place, you get some 8 points. So like this you have, and again look at it. Again what Guru mentioned, usage of client acceptance or engagement acceptance. So he talked about going and getting a Dun & Bradstreet report, going get a creditworthiness report. You are required to do this, and from the institute, in the website of institute, there is a Know Your Client form. Know Your Client form. Every audit working paper, permanent file, should have that Know Your Client form duly filled up and kept in your file. That's a form already available in the institute website. It was published sometime in 2016 or 17, one of those years. So evaluation of independence. Before you take up audit, you have to do an independence check. You have to ensure that the entire office, you have been able to go through that independent check. And let me share with you, and I have been in practice, and I can tell you at that time I did not do at that time. Partly we find it not so practical. So I had a team of 70 members. What this independence requires is, if I'm engaging a client, I should ask all the 70 staff members whether any of your family members, etc., are working there, etc. I don't think many of us do that, but that is a requirement to be done. And in one of the listed companies, I had this strange experience now where after asking a specific question like this, we were about to empanel, After asking the specific question, the firm went back and checked and later came back, and that firm we had to keep it aside and move on to the next firm. Fortunately, presence of mind, we asked that question, not that there was great intelligence to ask that question. We asked that question and the firm said we'll check and come back. Had the firm blatantly said, no, we are done already, we would have gone ahead. But the firm was kind enough, good enough to say we'll go check and come back. And they came and said that there is one particular staff where there is this relationship, and they also kind enough to say we will not pursue it, and we moved on to the next firm. So those are requirements which are there already in SQC1, and do you have that process in place? There's a score for that. So like this, there is an exhaustive list for all of the, which is there, audit planning how many resources, how much time, plan versus actual, all of that you get a score. So this is about how the questions are all drafted. Questions are drafted. And let me conclude with the following. This is again from the same document at the end. Yeah, some same document at the end. The AQMM document of the institute itself gives a guidance on the journey which all of us can follow as to how we can comply. What it says is, start benchmarking where you are standing now. First do a benchmarking now. Then identify a cross-functional team. Have some time plans, review it regularly, and see how you can progress same. So they're given a 5-step process on how the firms can move up their journey. Level 2 to level 3 to level 4. So there is a guidance available in the same document of AQMM. So with this, I'll conclude my talk on the topic. Thank you all for being such a wonderful audience. My sincere thanks to the managing committee members for the opportunity to present here. Thank you all and have a wonderful day.
Sir, there is a question to you.
Mr. Vijay Kumar, these days the banks are insisting projection reports by the auditors duly signed. If it is, I mean, the banks are also telling that some chartered accountants are doing that, insisting for this. Do you think that is it the right thing?
You're not required to do, sir. There is a specific audit standard on forecast. So you're required, if you're doing work as per that standard, give a quote of that particular standard and give it. Then it is valid. But the way I see many of the audit firms currently do it, they just take whatever spreadsheets are there and then give it. That will not work. And there's a Kolkata High Court judgment which has also come saying that these kind of things are not acceptable. So we are not supposed to give it, sir.
Any further questions? Yes.
Sir, that was a very good presentation. Thank you. I had two questions. One is you have mentioned that the AQMM is applicable for listed companies, whereas the SQC1 is applicable for the entire firm or the entire audits. So this 1/4/2023 for AQMM purposes, will it apply only to the listed companies now, or will it extend to everything later? With that clarity, I will ask the second question after this.
Yeah. The intent is to make it applicable later for others, but maybe in a phased manner. Like if you look at the NFRA and the Ind AS applicability, the sizes of entities they have broken, they'll do it later. So initially, at least 2-3 years, I expect to be only for listed, then for banks and corporate and the insurance companies.
And the second, more than a second question, it is more about understanding. The marking system seems to be based on yes or no, whereas sometimes there could be a question where we have to explain either of the answers. Is there any scope for it?
Yeah, so, some questions have a scaling.
Okay.
Maybe the 4 questions I took are yes, no, but there's some questions which have a scaling. Like for example, there's some question where you get out of 4, you can get 2, 3, 4. Some questions are drafted like that.
Okay, I think this is where I think the scope needs to be a little bit increased. Yes,
Yeah.
everything cannot be yes and no. I think it's very straight-jacketed.
I fully appreciate, and I also want to say the following. This document was in public domain for exposure draft for a year, and it was recommendatory for 2 years. But not much comments have come. Institute did nationwide outreach programs, but very less inputs have come. One thing I can assure you, sir, is that the Institute has a very open mind based on the implementation experience. If some of the questions have to be removed, some of the questions have to be edited, if the scoring has to be edited, they'll be more than happy to do it. So Institute is not rigid on this. Somewhere they had to make a beginning based on the assessment they did. But on implementation experience feedback, my stay at the council and my experience of the way it works, they are very more than happy to make edits of the same. They will do it.
Thank you, sir, for giving us such detailed insights into AQMM and illustrating how to ensure and uphold the quality of audit. I now request CA Chandra Prakash Jain, MC member, Bangalore branch, to conclude the session and provide a vote of thanks and present a memento as a token of gratitude and appreciation.
Good afternoon, members. I think many of them are still in lunch. It gives me immense pleasure to give vote of thanks for this wonderful session on this audit quality and maturity model by my teacher, principal, CA MP Vijay Kumar. I am one of those 70 members of Sir's team. I still remember first day of my articleship under him. Over 30 years of experience, including 8 years of practice and 6 years in the council, and being member of various boards like FRRB, QRB, International Accounting Standards Board, you have educated us well on the topic in your own style, and before signing any financial statement, members will think of this session. Thank you, sir. On behalf of managing committee members of Bangalore branch of SAIC of ICAI, and on behalf of 7 other branches of Karnataka of SAIC of ICAI, I thank you for the wonderful session, sir.